Why invest in black iron? Governments globally are spending billions to trillions on major infrastructure projects at this moment to try and help stimulate their economy and get people back to work, building everything from bridges, 5G networks, power transmission lines. At the same time, we have the green revolution occurring, where we see massive amount of spending on electric vehicles, wind turbines, and solar panels, all of which require steel. How is this relevant to black iron? Well, black iron is the top-ranked undeveloped iron ore project in the world by market intelligence firms Wood MacKenzie and CRU, on the brink of having all of our funding for construction pulled together. In the bubble chart on the left, you will see Wood Mackenzie's ranking of the different iron ore projects under development in the world, and you'll see black iron's Shymanivske project as having the highest after-tax internal rate of return and one of the highest iron contents. On the right, in the bar chart done by CRU, you'll see that this project is not just first quartile, but is actually the lowest cost undeveloped project in the world. And it's backed by a team that has solid experience both constructing and operating these large projects. I'm Matt Simpson, the CEO and one of the founders of Black Iron, and my background is a chemical engineer with an MBA. I started my career with Hatch, which is a global engineering consulting firm, designing metallurgical plants and then constructing them in Australia and Asia, followed by then joining Rio Tinto, where I worked for about 10 years in their iron ore division, with my last role being the general manager of the Iron Ore Company of Canada, where I had around 650 people that reported to me, managed around 300 million US a year to move over 70 million tons a year of material. I'm backed by a very solid team that has quite a bit of experience both building mines, arranging offtake agreements, which we're currently in the midst of finalizing with Cargill, and a board of directors that has a great mix of operational experience, political relationships, and financial acumen. So what makes black iron such a great opportunity? Well, with iron ore projects, it's all about moving large volumes of material at low cost. Proximity to railway lines, power, ports, and skilled labor is what really makes or breaks your economics. And in our case, as you'll see when we go through a more thorough presentation, the project's located only 2 kilometers away from the government rail with surplus capacity. High voltage power lines run right beside that railway, but the substation we'll tie into is only 30 kilometers away. We hit 5 ports on the Black Sea, with our preferred port being Port Eugenie that can take the large Cape-sized ocean-going vessels. And there's a city of 750,000 people, only 8 kilometers of site, that support the 7 operating iron ore mines within 40 kilometers of us. So this is a true iron ore mining district. For people that are really sensitive on the ESG front, it's not just about making more steel, it's about making it in a much more environmentally friendly manner. And in black iron's case, our 68% magnetite pellet feed cuts the greenhouse gas emissions in the net production of steel by about 30%, as compared to the more traditional 62% hematite iron ore fines. This is what our project looks like today. It's kind of a rolling grassy field. And if you squint towards the top of the page, you can actually see the high voltage power transmission lines right there. And right in front of those power transmission lines is the government-owned railway. The reason why I keep emphasizing infrastructure is that rail costs around 3 million a kilometer, about 5 million a mile to construct. Power lines are about 1 million a kilometer, or about 3 million a mile. And if you're just 200 miles away from a major port, you can easily spend upwards of $500 million to $1 billion just building this infrastructure. Whereas in our case, for under 500 million, you can fully build a 4 million ton a year mine, producing that 68% high grade magnetite pellet feed, and then self-fund your expansions to 8 million tons, possibly even 10 million tons and beyond. And because our product is so high grade, not only does it cut the greenhouse gas emissions, but it also commands a premium price of somewhere between $18 to $90 per ton on top of the benchmark 62% price. The economics for this project are extremely strong, and this is why we have interest from the likes of Cargill, who are looking to secure offtake rights in exchange for making a $75 million investment in project construction. And what's really unique is that even in a worst case scenario, which is the gray line here, iron ore forever and ever at $50 a ton, which is less than half of the actual price today, this project generates a greater than 30%, more like a mid 40% internal rate of return. If we take broker consensus of $70 a ton, the project generates a mid to high 50% after-tax internal rate of return, around a 1.7 billion net present value with a 10% discount rate after tax, compared to, again, our initial 450 million for construction. And even just a few good years like we're seeing right now with record iron ore prices generate just outstanding returns for the project. So this is one of those rare opportunities where in the bad times, you're making money, and in the average to good times, you're making phenomenal money. So it's always going to be solvent, always be able to repay its debt and be able to generate the tons in a cost-effective manner. In terms of our capital funding strategy, we're taking a traditional 40% equity/mezzanine, 60% debt financing. Again, we're currently finalizing an offtake agreement with Cargill, which is better known in the agricultural sector, but they actually are a very large trader of iron ore and steel. We have expressions of interest for 3 construction companies for circa 65 million. And we signed a term sheet, which we're now moving towards a binding contract for $100 million, 6.75% gross revenue royalty. So the bulk of the equity for construction is secured through the offtake, the royalty, and can be rounded out through the constructor. On the debt side, we already have expressions of interest from some mainstream European banks ranging from 260 to 300 million of debt on very attractive terms. And that debt is being backed by interest from export credit agencies and insurers. In terms of the project timeline, right now we are moving to finalize our offtake agreement with Cargill to a binding contract, and we expect that to be announced well before the end of the year. There's also some land we require from Ukraine's government that we're looking to secure, and we believe that will be done before the end of the year. Our environmental impact assessment is well underway by ERM, which is recognized as one of the top companies in this field. Our feasibility study is being led by Wood, and we expect that to also be done very early in the new year. Mid next year, we're aiming to have all the funding for project construction secured, all the permits required, and then start construction, which will take right around 2 years to complete. So lots going on with the company. Every time we announce one of these major catalysts, there should be a re-rating of the share price. In terms of our project location, as you can see in the bottom right, we're located in the center of Ukraine, well away from where any of the conflict occurred in the eastern part of the country. And again, where most of the iron ore mining occurs today in Ukraine. We take that railway located right beside our project down to Port Yuzhny, which is a deep sea port used by some of our neighboring mines to export their iron ore. And the most likely markets for us to target include steel mills in the Middle East, Europe, and possibly even growth markets of India and China. So in summary, why should you look to invest in black iron? Well, again, this is the top ranked undeveloped iron ore project in the world, on the brink of having all of our financing secured for construction, with a solid team that has experience both operating and developing mines of this kind of caliber. Thank you for your attention.